Marico, which did report double-digit growth in terms of volumes. And was in conversation with its CEO and MD, Saugata Gupta, and he spoke to us about the outlook going forward, as well as whether or not they could maintain the momentum in volumes growth, as well as input costs, specifically copra in this case, and what the outlook is. This is what he's saying. Listen in.
So I think we have had a decent quarter, but obviously I think we have to try harder. And I think what is most important is that our endeavor is to deliver 8 to 10% volume growth in India on the balanced 3 quarters, and double-digit constant currency growth in the international business in this balanced 3 quarters, so that at least we end the year with an overall double-digit volume growth and definitely 15% plus top-line growth. And therefore we are looking at increasing this momentum. Having said that, I think two things we are seeing for the sector. A lot of volatility and disruptions that was there in the sector, I think, is behind us. And one of the big green shoots we believe is we expect rural consumption to start picking up. We are already seeing, after a long time, rural consumption outstripping urban consumption. And the second thing, at least for us, our renewed focus on premium brands, which have delivered good growth, and we expect that to keep on consistently clocking 20% plus value growth, which is in the area of male grooming, foods, and categories like premium personal care, hair care in the female range, and the growth of modern trade and e-commerce. So if we can get all these things right, I think we should be in a good position to deliver on our aspirations. We have still to solve for 2 things. Our Southeast Asian business was flat, but as things stand out, we believe that we are on the way to recovery. Saffola had a mild recovery, but I think half the job is done, but we have to still some steps to be taken to get it back on track fully. And we have to solve these 2 as we move along this year.
Right, Mr. Gupta, as your press release suggests that this time around rural growth has been faster than urban growth. That said, how will the equation between pricing and gaining market share now play out for Marico in this upcoming year? Will there be focus more on gaining further market share? Will it be on higher pricing, or will it be a combination of both?
So fortunately for us, I think we have seen the peak of the input cost cycle behind us, especially for copra, which had a 70% point to point and a 50%, I would say, on a basis of input cost increase. So that is behind us. So therefore, I think, and we will continue to focus over the long term of driving volume growth and market share. We believe, in spite of that significant price increases, we passed on only some of it to the consumers. We wanted to drive value so that to the consumers, and we therefore had some contraction in margins over the short term. But if you really look at it, 100% of our business are in emerging markets, which are invest to grow markets, where I think philosophically we always give a premium of volume growth and market share over short term margins. You can always get back margins with efficiency, scale, and riding the cyclical nature of some of the commodities which are inputs for us. So therefore, I don't see any price increases coming in the balance of the year, but our endeavor is to continue on this momentum of volume growth for the balance year.
Right, Mr. Gupta, you did allude to the fact that we've seen a little bit of moderation in copra prices. Would it be fair to say that the copra prices have peaked out for now? That's the first part of my question. And the second part is, how are you witnessing trends when it comes to your other input costs going forward?
So as far as copra is concerned, if you see the historical trends, there are alternate cycles of inflation and deflation. So we are now the beginning of the softening of the cycle, and therefore clearly in the second half, I think we should be able to get back some of the contracted margins which are there. As regards the other things, I think it's very difficult to predict on crude, but again, I would think that a significant portion of the peak has happened in most of the input costs. So I really don't see any more price increases in the balance half of the year as of now. But as I said, that ultimately it's very difficult to predict some of the input costs, especially crude.
Right, Mr. Gupta, with respect to Saffola too, we are seeing about 10% volumes growth and it's gained traction as suggested in modern trade channels and e-commerce. You also suggest that there are some tweaks that have been made in marketing as well as pricing. Can you tell us a little more about that and perhaps give us an outlook with respect to the Saffola portfolio?
So let me start by saying that I would think there's only a marginal recovery, and we have sorted out some of the issues with respect to, I think, our promotional strategy. I think there still needs to be done something on our communication front and distribution, which will pan out over the next 3 to 6 months. And only then there'll be a full recovery of Saffola. As of now, as I said, I think it's a job half done.
Okay, so also a word on your value-added hair oil segment. It's becoming a crowded space. It's becoming more and more competitive. How is Marico differentiating itself at this point in time, and if the kind of trends that you are witnessing when it comes to your different markets?
So you're absolutely right. I think the competitive intensity in this segment has increased. Having said that, I think we have a two-pronged strategy, which is basically continuing to defend and aggressively participate in bottom of pyramid, which are the price point packs, at the same time drive premiumization. So therefore, we are focusing on both gaining value share and volume share, and we continue to actually gain this year also, this quarter also gaining share in terms of 90% of the portfolio. I think what is important is that we have to continuously drive bottom of pyramid through price point and distribution and maintaining pricing at that level, which is the 10-20 rupees price point packs. At the same time, we have to actively innovate and drive up trading and premiumization. Only then we will be able to continue on our journey in terms of driving both value and volume share.
Just two more questions, Mr. Gupta. The first one then, it would be about your Parachute. Again, we've seen a little bit of a resurgence in volumes. Once the base effect moves away, if you remove that part of the equation, how are you seeing, what is your outlook here when it comes to your Parachute portfolio?
So I think over the medium term, I believe that if we get, I think as you were right, absolutely in terms of there has been a slight resurgence, but there is also a base effect. I think there is no reason why it shouldn't be able to grow 5 to 7% over the medium term in Parachute. There could be some volatility here and there in the quarter when you are on a cyclical, in terms of, but we do have a sophisticated, reasonably priced model in place, and therefore we have to take certain pricing actions. So I think a 5 to 7% medium-term volume growth in Parachute is possible.
Right, and finally, Mr. Gupta, if you can tell me a little more about how you're assessing your performance in the international markets.
So if we look at the international business, while this quarter was a little soft and partly because of the fact that Southeast Asian business was a little flattish, I think we have solved for some of the internal issues in terms of execution and go-to-market and some of the issues in which we have faced in the Southeast Asian business. So we are well poised to deliver double-digit constant currency growth in the international business in the balance of the 3 quarters.